Hello, YouTube, and welcome back. Today, I'm going to go over updates for the Dividend channel. And once again, this is not financial advice, just entertainment. I want to show people what a real dividend portfolio looks like and how it's growing over time. Thing is, most people want money fast, and dividend investors choose something different. It's a slower growth, a slower race than exciting stocks that give viral screenshots and overnight, 1 week swing trades. Dividend investing really is not exciting at first. What makes it exciting is for me is seeing the dividends come in and maybe part of learning tracking and learning how to make some of these charts is what makes it more interesting. um, but I'm going to go through today where we're at and update some of these yields, which I don't think people need to update that often, but we started a new year. We're halfway through the first month of the year, and so it's a good time to see where we're at on updating some of these. Um, and you know, at the beginning of doing this, the dividends, it doesn't even feel like it's going to make any difference whatsoever. The the dividends just trickle in, just quietly showing up. It's just a few dollars. The first month, it feels like just a few dollars that could buy one coffee a month. Um, but that's where most people quit, and they don't keep consistently putting money in and consistently sticking with it. And really, we've shown enough times on the channel, the earlier that you start, the more the compounding effect will have. So, where we're at today, we're still in January 2026. Um, from what happened last month, since we don't have any weekly payers anymore, um, there's less that are coming in on the week, but I'm learning that that is a safer play. Anyways, so today we're at $220 halfway through the month, and then I'm expecting if it goes like last month, we should get um, another $80. Six, I think this $31 we'll get. So if it's like last month, we should get about another $90 come in. I'm fairly certain we'll hit 300. We should hit 300 again, no problem, because we have auto buys on, right? To buy a bunch of the funds, and then I'm gonna go over the funds. The thing is, dividend investing is about consistency, right? You're investing in good markets, you're investing in bad markets. The your dividends, even when the price of a fund goes down, say the dividends are they're buying more shares even when the prices are lower. Just like some other investing, because well, we're not buying and selling, so when the price goes up, we almost don't like it at the early stages, right? Because we want to, we want to buy the fund when it's cheaper, but um, we have some good news and everything as we go through. But it does take patience, and you're reinvesting, you're staying the course, and the reason is we want these dividends not only for retirement, but it can also give a sense of safety. Um, $300 a month is not a ton right now, but I can visualize what bills it could cover. The nice thing is it can start to give a sense of security where if if I lost my job, people are supposed to have a uh, emergency fund for if you lose your job, something bad happens, right? Mostly about job security. But as this grows, then maybe I could make it a little further without having to dip into as much of the emergency fund. Imagine if by the end of the year, um, which this won't likely happen, but imagine at the end of the year, it's paying $1,000 a month. It doesn't necessarily mean, right, I'm increasing my lifestyle spending by $1,000 a month, but it means if I lost my job, I could turn off the dividend reinvestments and I could use that towards emergency fund things. I'm actually starting to think that emergency fund money should just go in this Robinhood account because at the end of the day, I have holdings in these funds and I could always just sell them. But as long as I'm not using that money for an emergency, why not have it growing? Especially in some of these really, really safe funds. So, anyways, 220. We only had a couple. We had like this $9.19 dividend come in since the last video, and then the rest of them will come in near the end of the month, and that's great. This is the chart on the right of. Oh, this did this update? Oh, is this going? I guess this is. Okay, this is going by year. So we'll get to see where we end up at the end of the year. And then this is just month to month on the right here. And let me move this over a little. So we're at 220, and this is the dividends month to month, and we're going up and to the right. And, the growth is going to slow down a bit because I went pretty explosive in the first like 6 months of this, and we did drop some of those higher risk dividends. Uh, so where we're at right now, on this video, I'm going to update the annual yield for all of these, and I'm going to update the weighting because I have bought more, and I'm just considering dropping one of these lower yielding. They're really, really safe um, funds, but they are lower yield, like this 5%. It should be one of the safest, but I'm considering dropping it just because, why not? I'm looking at retirement, and why am I holding it here when I could put it in a JEPQ or something like that? Am I really positioned to need that? And some of that's going to come down to the weighted average, which I'm also going to calculate. So that's where we're at. Also, one thing I'm doing, this won't go extend out forever, and I don't have dates, but I'm looking at the percent gain or loss of each of the funds in the portfolio and just adding a new column. So this is updated as of right now, making this video. So we have great news. Almost everything went up. JEPQ went up by almost a whole percent. SPYI almost a whole percent. QQQI went down a little. GPIC up almost a whole percent. JEPI. The big gainers were SCHD and SPHD, up 3% on each of those, and SCHD is up 6% since we started it. And there's some stuff with that where it did really bad, I guess, over the last year or two, and it's kind of like bouncing back, you could say. Um, so what this looks like in graph format, that's all of these. And so we can see like JEPQ has had a higher total return before. but it's trending back up. SPYI has its highest in this. It's this just for this account, right? At its highest return so far. JEPI, highest return. SCHD, SPHD, you can see those really popped. What's also important is SPYT is going back up, which is good. That's our really risky position, right? Um, and this is what I expected. JAAA, JBBB, and clause. I didn't love that JBBB did drop down so much, but these three are a particular type of fund. They don't have the highest yield ever, but even clause and JBBB are in the 7% range, which is fine. And the point of these is that they should basically barely move. These being down less than a percent, you can see they're holding pretty steady, and they should basically barely move. And that's great to see these being like really steady in here, which is what we expect. But the thing is, they do get a higher yield than like an SCHD, SPHD, only at like 3% range. So you're kind of trading off that for the volatility. Um, CSWC is at its highest ever. IWMI. I'm really, really liking these two. So happy that I have these. ASGI. I don't know why it dropped so much, but it's coming back up. Um, but yeah, IWMI and CSWC. I'm really liking these funds. So that's everything. And oh, one more thing before I go into the weighted average and look up the new yields, which will be kind of fun to see where they're at this year. I'm also tracking SPYT, which is pretty high weighting in the portfolio. Um, this is a 20% yield, but in the trade-off for that is that it can be much more volatile, and so because of that, I am tracking, unlike the other ones, if I'm in the green or not. So right now it's down 1.76%, and with everything I'm holding, that means it's down $112. But we've gotten $309 in dividends, so that should mean we're up 197 as of today, and this pays at the beginning of the month. So let's say it stayed steady through the rest of the month. Anyways, that's where we're at. We're still in the green on that, and just watching that one more closely. So that's everything. And if you want to keep watching, following this fund, hit subscribe if you want to. And I did come across a new fund that came out. It's a Neos fund, but it's just too new for me to want to do anything with it. But I'll be watching um, that. Let me know if you see any funds that I'm missing that I should take a look at. Um, so next thing, I'm going to calculate new yields and new weights and get a new weighted average for the whole portfolio. So how I'm going to do that, I'm going to move this over on the other screen and do these one at a time on my list. So JEPQ, the current yield I have is 9.8%, and this went up, which is good. And I'm just kind of just doing an average, not going, just kind of eyeballing it. So I'm going to say 10.2%. Then we have SPYI. Oh, you guys can't see this. Okay. SPYI. We'll see if how many of these are the same. 11. It's like 11 point. 0.01%. I'll just leave it at 11. Okay, that is the same. QQQI. I currently have it at 13% with the expense ratio. Um, it's up a little. We'll call it 13.1%. Then I have G pick. And I think some of these aren't listed, but hopefully most of them are. Currently, GPIC I have at 9.4%, and so that's very, very close. I think technically it's up a little bit. Right now it says 19.5, which this is really cool because like this is saying the yield I had 19.4% or 9.4%, but now I'm looking in this month and it's 9.5%. But all of these funds have also gone up in the total holdings. So that's cool to see that the dividend might be growing and the fund is growing. I don't know. That's just what I'm seeing. Um, we have JEPI. Currently for JEPI, I have 7.8%. And yeah, this is up a tiny bit. If I look at you minus off the expense ratio, I have, yeah, 7.8. And so really this could be 7.9. So that's cool. SCHD, this will be pretty interesting to see. Currently I have 3.7%, and that's still pretty accurate. It's like 3 point, it's closer to 3.8. I'm just going to leave it at 3.7 in my chart. SPHD. I have it at 3.53%, and this one also went up. So this is now closer to 3 point, also 3.7%. So that's cool. J AAA. See what this one is saying. So this actually went down. The yield I have is 5.28, but this is now saying 5.1%. So that went down. Next is SPYT. See if this is any different. I have it at 20%. And I mean, I guess technically this is higher than what I had it. It's like 20.5%. I'll put 20.4 to be a little conservative. J triple B. I have 7.1%, and this is also down. Um, I have 7.1, but looks like this is more like 6.9%. I have clause. See if this one's also down. It's in the same category. I have 7.16%. This is down a little less, but does look down. So 7.12%. Down a little less, but okay, let's see. This is one of my favorites, IWMI. I've got it at 13.3%. I wouldn't be surprised if this went down. Looks about the same. I'll leave that at 13.3. CSWC. Yeah, now this one I'm getting the dividend yield from a different place. It just says forward dividend yield. So this is down almost a whole percent. I've got 14.84 and this says 13.49 now. So that's down quite a bit. And then last one I have is ASGI and I've got it at 11.06. And this one also is listed here. And this one's up a tiny bit, 11.28. Cool. So I've got the new yields, and maybe I should make this like calculated somehow. Um, but it's not what I'm going to do. Um, so let's see. Turn off the display for a second, and I guess I'll do it this way. So I'm going to calculate the weighted average. So because these all have different yields, I'm going to recalculate the weight that these are in the portfolio, which should change a bit because we've had dividends buying back in, and I've also been buying more of some different funds. So you'll see how these change. But one of the reasons I'm doing this is just to show you how you get this weighted average. Because if we wanted to calculate out into the future of everything we're doing, we want the weighted average of the whole portfolio. So that's how we do this. I'm just going to use Robinhood, which is going to tell me for each one of these holdings the it's portfolio diversity. So it just says this is 9.22. And this is the amount. So that went down. I already know, I think, which ones are going down and which ones are going up. But yeah, this is how much of the portfolio is each one of these. 10.13 IWMI. This actually went down. 6.24 CSWC. This went up quite a bit, which is good. 3.52. I haven't sold anything major. QQQQI. This is up quite a bit. 9.24%. SCHD is almost the same. 2.36. GPIC, probably about the same. 3.25. SPHD is also. Oh, did I put in one of those wrong? SCHD. Okay. SPHD. Wow, I didn't. So, like, I didn't realize. Okay, this is up a lot. But you know what? I did hear that these might be. I heard that these two funds might be undervalued, which is probably why I bought more. Um, JAAA should be down. That's good. If there's anything I'm going to sell and put into other things, it might be JAAA, just because it has, even though it's so safe, it just has such a low yield, and really, I could easily double the dividend income this is bringing in by just putting it in something else. Um, have to decide. Well, getting this total portfolio might help me decide. ASGI is down as well. This is only 1% now. Clause should be down. Yeah, okay. 10.31. J triple B almost the same, 4.12. And then lastly, SPYT. So the thing I bought the most of was QQQI and also, I guess, SPHD, which means our 20% yield. I didn't sell any of this, but in terms of the overall portfolio, it's down a little bit, which could affect our weighted average. So what we're going to do now is I'm just going to use this weighted average calculator. And how this works is we just take all those numbers. Let's see if I can move this. Just Google weighted average calculator. I use this one called Rapid Tables. There might be better ones out there. I don't know. Rapid Tables weighted average calculator. And so how this works is I'm going to put in all those values. So we need the data value, which is the yield, 10.2, and then the weight, which is the percentage of the fund that we just got. .13, and at the end of this, it will spit out our final weighted average. Let me know if you do anything like this for your funds. Maybe there's a way I can do this in Google Sheets since I already have the numbers in there. I feel like this is the easiest thing to mess up because, like, going cross-eyed, looking across 8.5. So 3.7, 2.36. I need to add a few more. Another 3.7, 4.16. I have a feeling that the weighted average is going to stay almost exactly the same. I will be a little sad if it goes down, but if it does go down, that's a good reason to sell some of this J triple A. .4, 19.58, 6.9, 2, 4 more. 2%, 10.31. I think this is a good thing to check in on at the beginning of the year. So, I do have these funds that I really like that are in these 13% yielding. They seem to be doing pretty good. I mean, part of the reason to do this whole portfolio is to just learn what funds I'm liking and not liking. Okay, calculate. Yeah, it's almost the same. 11.4. Oh my gosh, it didn't change at all. I got 11.41 and now I have like 11.40. So, with all of the changes, our total weighted average is almost exactly the same. Pretty cool. Um, so yeah, this dividend investing, it should reward discipline for you, but the whole thing is to get your money working for you, or I want to get my money working for me at least. If I'm if I'm bringing in about $300 a month extra, that's about $10 a day, and it feels pretty good. Um, it's like your money is working whether you like it or not. It's either working for you or against you. Um, it is a slow pace race, and I haven't even been doing this a whole year yet. Only started in April of last year. So we still have a few months to catch up to that. But the type of investing that this is, it feels reliable and secure. And that's a nice feeling. So, anyways, that's the update for January 16th. We're basically halfway through the month, and unless something happens, see you at the end of the month.